Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He usually talks to us from Florida. You're up on the Jersey Shore. Have you said hi to Schnooky yet?
Schnooky, thanks for inviting me on, by the way, Jim. I'm always pleased to guest on your show. I'm at the Jersey Shore. Well, I took an indefinite roadie. I left Florida in mid-July, and my goal was simply to stay away from Florida for as long as I had to until the heat breaks. And as far as I'm told, that hasn't happened quite yet. But I like golf, but not quite as much as my neighbors who are playing it in 95-degree heat.
Rick, is the heat back on the U.S. dollar? As I mean, it's heating up. It's getting better.
Well, I'm excited to tell you, Jim, that even as we speak, over the last couple minutes, the dollar has broken out. According to my own technical method, I look for rally legs to take out prior peaks. And in this case, just today, the little move in the dollar has taken out 1, 2, 3, 4 external peaks that stretch back to late July. And there's a little bit of hesitation there. We had a couple of small pullbacks to get a running start. But I think the general effect, which is essentially on a single day, the dollar blew past 3 prior peaks. It adds to the likelihood that the bottom we saw in early September on the dollar index is going to be a major one. And as I keep saying, if that's the case, everybody's on the wrong side of this trade. Everybody expects inflation. Everybody's been a dollar bear, and whatever trend has been in effect since March 23rd, based on that massive, freakish sigh of relief we've had over Fed stimulus, they're in for a rude awakening.
What does this mean for the markets?
Well, a strong dollar is going to put pressure on virtually every assumption, every debtor, every piece of purported stimulus. Stimulus will stimulate less, and anyone who owes in dollars is going to be under a bigger burden. I think it's always been obvious, that when mortgages come down to the lowest levels that we've ever seen, that there was some banana peel out there waiting to be slipped on. And a point that I made prior to the 2007 and 8 crash, which is very much applicable here, is that when your home price is falling maybe 10% a year, as occurred back in the great financial crash of 2007 and 8, even a 2% mortgage is going to be a crushing burden. So there's a lot of home equity collateral out there. I think that the flurry of buying that's pushed home prices in some areas to new records is just nuttiness, really. And in the case of this little resort where I'm staying, all the beach homes are like $5 to $15 million, and it's all Philadelphians and New Yorkers fleeing the cities. They're just waving cash in the face of the sellers. So their homes changing hands. But it's not just here. You do have a huge outflux from New York, Chicago, all the cities that are about to go to hell. And so that's had a temporary effect on real estate. But this strong dollar is going to kill everything. It's really a party more than a pooper. It's a party destroyer.
What kind of a trading strategy should you be using to deal with it?
Well, I like anything that everybody hates right now. Best of all, cash or near cash. We've got so many people chasing yields that virtually all the garbage has been bid up to the sky, including the whole galaxy of junk paper. So, the one point I would make is that the deflation that's coming is a deleveraging. And there's no real money to be made in a deleveraging event. You may get a lot of doomsday promotions, newsletter promotions that say, hey, we're going to show you not only how to protect yourself from the coming collapse of the economy, and most of them are, I guess, inflationists or just generic disaster guys, but my vision is very specifically pegged to deflation. But in any case, if that comes to pass, you'll be doing well with a few geniuses out there to just come out of the whole thing with maybe 50% of your net worth intact. So it's not really a time where you line up your ducks to make a ton of money when everybody else is getting foreclosed on. It's just not going to happen that way. But as I keep instructing my son, he flips high-performance sports cars, and specifically the Toyota Supra, collectible from the 90s. And at times he keeps an inventory of as many as a dozen cars. And being 26 years old, he has no idea what a bear market looks like or what a recession looks like or how the market for these Supras, which ranges anywhere from about 20 or 30 grand up to 200,000, he has no idea about how that market can disappear, how the bids can disappear overnight. So, but the one thing I've said to him that I hope is inspiring him to be a little bit more cautious is that if he wants to be really rich, and I'm not talking about a few measly millions, but big money, that he should protect his capital now without really trying to make too much on it, so that when everything implodes, he'll be able to buy whatever he wants at 10 cents on the dollar.
We'll have more with Rick Ackerman right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, I saw a television ad that was aimed at retired people who said you're not making any money in the bank, so you should be investing with us to put your money, your retirement funds into the stock market. Would that be a poor move or poorly advised?
Well, it depends. I know a lot of people who've done well in good times and bad with some of the bigger funds. It really depends what they're doing and what their idea of safety is. Anybody who came through the 1970s thinking, well, safety is bonds, they had another thing coming to them. People were under the impression that if they never checked statements from their broker, that the inflation that we had during the 70s was impairing the returns. Instead of the usual 5, 6, 7, 8%, they were only getting 3% on their money. What they neglected to consider was that the destruction of capital and the collapse of bond prices, so that you could come out of the 70s experience with this supposedly safe portfolio and have lost half your nest egg. So you really have to pick and choose them here. And I think I would fall back on the Peter Lynch idea that if you understand what you're investing in, that's a good start. So I wouldn't just take the performance numbers as 100% as your guide. You should look to see what some of these funds are doing and position yourself according to things that you think make sense. Unfortunately, some of the things that make sense, such as we've seen in the pandemic, that they're just absolute winners. They're companies that didn't miss a beat. Amazon is one, and I guess Chipotle is another. Unfortunately, some of those easy story stocks have been bought up to the sky and beyond. So you're going to have to use your own noggin really to look around and try to imagine for yourself which businesses are going to, if not flourish, at least survive the hardest of times.
Any particular sectors that you're looking at there?
Not really. I guess some of the utilities have been picked over, especially the ones with dividends, and these defensive stocks they've gotten a pretty good look, and there's no shortage of investors out there who are pretty defensive. So the utilities are definitely going to be survivors. It's just a question of how high the prices are. You might one place that may not be completely discounted will be the effect of the demographic shift of people fleeing the cities, which are in the process of becoming hellholes. Chicago, San Francisco, New York, and that's going to cause certain businesses in the suburbs to flourish. But one of them could be power providers for regions that are heavily suburban. So I'm just sort of thinking out loud here, but that's one way to go. You're going to see demographic growth. You're going to see population growth in places that haven't experienced it in quite to quite the degree that it's about to occur.
Why are people fleeing U.S. cities? Is it high taxes, civil unrest, or you can work from anywhere you want in the world right now so you don't have to go down to the downtown office?
Well, it's because they're all in the process of becoming dumps under the Democratic leadership that has destroyed the cities. 24 of the 25 largest cities, I think, in this country have been run by Democrats more or less forever. And if you look at San Francisco in particular, I lived there for 22 years, and you see a city that is so incredibly top-heavy with administrators. You can't believe the number of people who are on the payroll for $150,000, $250,000. It's absolutely stunning. And all of them draw pensions and they have great health care plans that you and I will never have. And sooner or later, the riots are going to be over, and I think cities like San Francisco are going to be dealing with the aftermath. So it's really a combination of things. All of the things that made New York so desirable are in one way or another related to the density of people there. You get so many people together, and certain things really flourish. Broadway and the restaurant business even more so than in many other cities. And it's just a town where most of the benefits come from everybody being in one relatively small place. So those benefits are now overshadowed by the problems of cities, and we're just at the leading edge, really, of the flight from places like New York of rich people who are just not going to stick around to be taxed to death. So the destruction of the cities, the collapse of the cities, is really just in its early stages.
In Vancouver, one of their solutions to all the civic problems of homelessness or lack of garbage collection and so on is to hire more public relations people to be spin doctors and tell you that even though there's garbage piled up outside your house and there's a homeless guy living in your garden shed, things are better. Is that the kind of thing that's happening in the U.S. as well?
Well, I think that's why Trump's a shoo-in for a landslide victory. People have eyes; they see what's going on, really, and it's all pretty obvious. But it's going to be obvious in the worst way when they start getting their tax bills for declining city services on a tax base that's shrinking. That's declining even faster.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, with the U.S. dollar coming back, what does that do to gold and silver?
It's definitely going to put them under pressure. One guy in my chat room who follows Martin Armstrong pretty closely, Armstrong apparently has raised the possibility that gold's recent high will be a high for the next 2 decades. I tend to doubt that, and I've told my own subscribers that even if he's right, it has no tradable implications right now, and it's going to be, even at the strategic level, just a big distraction. But I think that gold and silver will be under pressure as the dollar strengthens, but as the strengthening produces a true economic crisis, that's going to put it's going to put upward pressure on gold. I think gold and silver will benefit from the extremity of distress that we're about to see.
What's going to go on with crude?
Well, crude's garbage too. I mean, the only reason anyone even cared about crude was that it's a major source of the collateral that the feather merchants used to construct a $2.5 quadrillion derivatives edifice. And we've talked about this before. Coming out of the 2007-8 crash, all the feather merchants and the quacks and the con men were thinking, well, what can we hawk up to the eyeballs and sell to the public? So, it took a little while, of course, for the housing thing to get going again. But coming out of 2007-08, there was a lot of leveraging of energy resources. And that worked fine up to a point. But then we got to be such a global fracking power that it's put a lot of deflationary pressure on energy prices. And like so many other things, even Apple stock, the powers that be have decided we just have to keep pushing these things up, because if they start going down, that's going to be the end of it, end of the game, game, set, match, the end of the world, economically speaking. So crude oil then is benefiting from the same hoax that has pushed Apple into a valuation above $2 trillion. And you can see the importance of that, really, because a $2 trillion stock is big enough so that all of the institutional chimpanzees who own it, they're doing great. And, the big funds that are in Apple up to their eyeballs, can at least pretend that they're solvent. So to the extent that, the state of Illinois, which I mentioned it's going to be the first state whose pension system goes belly up, I mean really belly up, Apple alone gives Illinois at least a pretense that maybe it's going to muddle through and remain solvent. So when you float a $2 trillion stock up into the ionosphere, it has a psychological effect and also an accounting, a ledger book effect on all the pensions that hold Apple up the wazoo. So, but it's going to end because, as Herb Stein is remembered for saying, any trend that can't continue indefinitely won't. So, you come to the question, well, how high can Apple go? And how high can crude go with the world in a depression?
Rick, anything else we should be keeping an eye on right now?
I think just the dollar, and if you wanted to complicate it, you could watch Apple as well. I was watching only Apple for a while, and it kept me. I'm obviously a hardcore perma bear, but it kept me properly bullish on the market, and I was able to forecast the rallies confidently. So Apple is still kind of a bellwether, but you have to. It's a little bit more complicated now. They split the stock 4-for-1, really just so that the masters of the universe could distribute Apple to imbeciles, and they succeeded so wildly in their first attempt. Ordinarily, when a stock splits, it's under pressure, and in the case of Apple, it had an enormous rally in the first few days following the split, and it hit a high of around 140. The split price, I think, was between 120 and 125, but this $2 trillion company rallied up to about 138, and the smart money was there distributing stock like crazy to all the Robinhood idiots and who could finally afford shares of Apple at that price. And I don't even think the money men, the smart money, envision being able to engineer a collapse in the stock as successful as they've just done. I mean, it came all the way down to 103, I think it was, from 140. So yesterday I put out a warning to my own guys that even though the market was down hard, Apple was somewhat buoyant, and it was just telling you that the dirtballs who were distributing stock at 138, they basically had their fill down around 103, and the stock wasn't going to get to 100. So Apple is still a very key stock, and it reflects the institutional mentality completely. But right now, it's not so much mentality as a criminal enterprise to distribute as much of it as they can. Same goes for Tesla, another egregiously overvalued stock, which was split for the explicit purpose of selling as much as they could, the big guys unloading as much as they could on all the rubes. So anyway, caveat emptor and all that.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. I appreciate a chance to connect with your audience, and always enjoy talking with you.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.